So last two sessions we are discussing our core module FICO. So under FICO, what are the submodules we have, and so we are trying to understand each submodule functionality. So yesterday, part of accounts payable. So we discussed payment process. So previous sessions we discussed the invoicing process. So we are discussing detailed AP process. So if you understand the end-to-end AP process, so the quite opposite to we can understand AR process, accounts receivable, AP and AR. So we understand yesterday invoicing and how system is going to calculate in SAP taxes, okay, and as well as if any service purchases, how system will calculate the TDS, okay, and also we discussed the new legal requirement for India from July 1st to 2021 onwards. This is a new legal requirement. So it is applicable 194Q section and one more section is 206 AB. Okay. And as well as, so once you post any purchase entry with vendors and customers, generally we have the agreement with vendors and customers payment terms. So we are going to do the credit business. So as per that, system should give the due date for that invoice. We can check in the report. Then as per due date, we are going to make a payment. So when you are going to make a payment, there are two ways we can make a payment. One is manual. Manual payment, and so another one is automation. So small organizations, okay, mostly they are going to go with manual payments, but when you go to big organization, it is very difficult to go with manual payment. So per day they are going to do the hundreds of payments, thousands of payments, okay, for different vendors, different amounts, and also their payment mode also different. So some of the payments they want to go with check payments, some of the payments they want to go with transfer payments, and as well as foreign vendors they want to go with some other payment mode. So if you want to do this like this manual payment to selection, amount selection, vendor selection, bank selection, amount to entering, all this is huge time taking activity, and as well as we have chances, some challenges. Okay, instead of selecting one bank, if you select another bank, okay, so and while making the payment currency selection, amount to filtration, all those challenges we understand yesterday. So for that, the automation is the best solution for big organizations. Still, some small organizations they can go with manual only because of they don't have proper criteria for the payments. So as per their requirements, okay, they can go daily basis. Today, what are the vendors? It is payment urgent. So accordingly, they can go and run the payment. Rest of the vendors they can go later. Okay, but whereas MNC is not like this, big companies. As per agreement, so whatever day we have the invoices due, so we'll go and run the payment. Maybe 1 or 2 days, more or less, we can run the payment. Okay, so here we have to set the priorities first as per business requirement. So what are the mode of payments they are going to use, and for that, what is the priority of banks they want to go ahead payments. Then also after run the payment in SAP, so this is the automatic payment program. It will help up to one level to run the payment in our internal system. Means whatever system we are using SAP. So similarly, other ERPs also, we are going to run the payment our internal system. But finally, we have to transfer the funds from our bank account to vendor bank account. Okay. So again, we understand that who is going to do the transfer payments. It is very difficult to go on to do the net banking manually one by one vendor. Okay, so here we have a couple of challenges. So manually, if you enter the wrong amount, it will go huge funds to vendor, and chances is they select the wrong vendor bank account. And also chances is there someone do the fraud. Okay, to avoid all those things, so what we can do? So in SAP, whenever you run the payment, so backend, we can generate the payment file. Okay, we can generate the payment file. In that payment file, we are going to capture the, so all key information, means even everyone using net banking or phone pay, Google Pay, right? So what we are going to do before going to run the payment, transfer the funds, first we have to add the beneficiary. So to add the beneficiary, what are the key information, key details is required? Beneficiary name, beneficiary bank account, IFSC code. Okay, and we have to register those beneficiary details with our bank. So then only we can able to transfer the funds. Okay, so that in this payment file, we have to capture vendor name, vendor bank account, vendor IFSC code, and how much amount you are going to transfer the funds. And sender bank means our bank. So again, our bank account, IFSC code, name of the account holder. These are the details we need to capture. Like vendor 1, vendor 2, vendor 3. So I'm going to do today 100 payments. So all 100 vendors details we have to bring into this payment file. Okay. Then this payment file. So generally big payments is, it is daily payments. Every day they are going to do the payments. So we are going to generate the payment file, and this payment file, so we are going to send to the banker. We'll send to the bank portal. So then banker is going to process this payment file. So we can avoid all manual activities, manual mistakes. Okay, this is one-time setup. If you do the properly setup, then there is no much issues or ongoing activities, daily basis. Okay, but very rare case any technical challenges is there again. So we have to analyze whether it is our end problem or banker end problem. Okay, so we have to resolve that issues and we have to continue the payment process. So everyone is clear this process, right? Yesterday's payment to process manual I shown in the system, and I explained a couple of challenges while doing the manual payment. Okay, so for that, the alternative is automatic payment program. Okay, so theoretically I explained this automatic payment process, how it will work. System will do when you go to practical sessions. Okay.
One more thing, auto debit we were not explained.
Yeah, auto debit functionality only Europe country it is applicable. Means customer receipts, right?
And I want to know that how the auto debit will happen in automatic manual payment.
Sorry.
See, we are some countries they are using the auto debit payment. So
That's why
how we can
it is for collection, right?
Yes.
It's for collection, customer collection.
And down payment also are not explained.
Yeah, I did not cover everything. So still we are in the demo session. Okay. Down payment also we can do. Down payment means any advance payments if you want to do. So generally most of the cases what we'll do, Agnes invoice, we are going to make a payments. Okay. So few cases we are going to make a advance payment to vendor. So this advance payment also it is possible through automatic payment. Okay. So advance payment.
Other one is retention entries also is not mentioned here. So
Sorry.
Retention.
See, there are so many scenarios. So just I am giving the overview of the course as of now. Okay. So retention, it will come integration. So we not yet started that integration process.
Okay.
So retention process, it will come here. Right? Invoicing only, right?
Yes.
Yeah, I will cover that part. So as of now, FI submodules we are discussing. So part of FI, still we are in the AP process. Okay. So
Okay.
here it is quite opposite, we can understand. Then, so I told that yesterday, if required, we'll discuss more detailed fixed asset model, how it will works. Then we'll go to MM integration process. So MM integration process, it will come retention process, retention concept. Okay. What is retention? It is one kind of holding the money. So some service purchases. So generally business, what they are going to do? Okay. So today I am getting some service from vendor. So assume that some 1 lakh service I am getting, but we are not sure end of the day whether this service is up to mark or not. Suppose electrical work is there. So I'm going to give the third party some IT parks or big shopping mall I'm going to construct. Okay. So I'm going to give some third party electrical work. Okay. Assume that 1 or 2 months they are going to complete the work. So assume that this is 10 lakhs contract. Okay. So end of the work. So what contract is telling? Everything is done. Okay. So he's going to raise the invoice and he's asking money. Generally, what I will tell. So the end of the day, I cannot analyze the quality of work, right? So once you start the usage, then you come to know, is there any challenges? Is there any mistake? Is there any loopholes, right? Is it possible to understand first day itself, whether the work is done properly or not, whether the quality is up to mark or not? Anyone? Chiranjeevi?
No, it's not possible.
Not possible, right? Or any technical service you are getting.
Yeah.
Okay. So technical guy will come and do the work and he will tell that, okay, work is completed. So he is asking money. Suppose it is 1 lakh work. So generally what we are going to do? So we need to wait for a few more days to run this activity. If you do the daily basis, you start the usage, then we come to know after 10 days, 15 days, 30 days, some any loopholes is there, or else example, plumbing work is there, pipeline work. Okay. So the first day we cannot identify it, what are the leakages is there, whether it is working properly or not. So after 1 week, 10 days, 1 month, by usage, we come to know any leakages is there. Okay. So this kind of service work. So what we are going to do, whenever you are going to make a payment, or else when you are booking the invoice itself, certain amount we are going to hold. Suppose the invoice is 1 lakh service or 10 lakh service. On that, when they are going to start the work or agreement itself, they are going to mention. Okay. So this kind of work, we are not going to pay initially full amount. So we are going to hold the some money. Okay. So that 5% money we are going to hold. So we'll pay remaining amount. And we after certain period of time, maybe 1 month or 2 months, 3 months, they have the general agreement when they start the business itself. So after that, if everything is fine, okay, if it is up to mark, if you are thinking, then we are going to release the retention money. Okay. So that is the retention concept. It is part of MM integration, it will come. So here, first the initial step, what we are going to do, we are going to raise the purchase order. So when they are going to raise the purchase order itself, they are going to mention the retention money. Okay, just 2 minutes. So while raising the purchase order, so we can tell the system. Generally, this concept is only applicable for service purchases, not for material purchases. Okay. So generally procurement team, they are going to raise the purchase orders. So this is the transaction we can raise the purchase order. So here we have the option retention. Okay. So if any retention is applicable for this purchase order, see, this is the transaction code. We are going to raise the purchase order for your vendor, whatever service we are going to raise. Okay. So in this purchase order, we can raise the order for service or material or fixed asset. Okay. So generally, whatever project I work, it is service related purchases. Therefore, they have some business agreement. Okay. So here they can mention, so retention is applicable, whether it is retention whole PO level, it is applicable, or any particular item level, it is applicable. Suppose from vendor, so I'm going to take 4 or 5 services. Okay. Some of the service, it is not applicable retention. Only few services is applicable. Then we can tell the system item level. If all services is applicable means header level. Item level nothing but, so service 1, service 2, suppose electrical work 1 service, wood work another service, plumbing work another service. So like that 4 or 5 services I am getting from the vendor. So here I am going to mention the all services. Service 1, service 2, service 3, like that. Okay. If this particular service is retention is applicable, then I have to tell the system here item level retention. Okay, not whole PO level.
Sir, if it is applicable for purchases?
This is purchases only. Okay, you are talking about sales.
No. Not service purchases, item purchase.
Item means even
Item
service
means like,
also one
sir,
item.
Purchase of goods.
So here item means not only material. Okay. So the service item. So here item number is there now.
Okay.
System point of view, this is the item number. Okay. So here you can mention if service case, some ABC service. Okay. Some XYZ service. So like that we can mention the each service one item, one item line. System point of view, this is the item. Okay, we can give our own numbering here. So this is one item. This is another item. It can be material or it can be service or it can be asset also. Okay. So then suppose these 2 services I'm going to raise the purchase order to my vendor. Then suppose XYZ service is applicable retention. Then so here I have to tell the system item level retention. Then bottom we have the another option to tell the system if you do the complete configuration, it will allow. So generally item level, we can tell the system which item is applicable, how much percent is applicable. Okay. Or else item 1 is applicable 5% retention, item 2 is applicable 10%. So I cannot tell, right, header level. Okay. So I'm going to raise the purchase order for 2 items. Where is that gone? Okay, so in this case, we cannot tell in header level whatever percentage you want. Okay, because of item 1, so we have the agreement with vendor 5% retention, item 2 10%. So if I go with header level, so the problem is which percentage I have to tell, which item, which percentage, so that time we can use the item level retention. Okay, so similarly, while raising the purchase order, so you are talking about this, right? Down payment. Hello, Chiranjeev? Are you there? Hello? Okay. So while creating the purchase order itself, so some of the cases vendor is asking some advance. Okay. Suppose some foreign purchase you are going to do, some new vendors you are going to do the purchase. Sometimes they are going to ask some advance. Okay. Or else you have long association with business. Okay. So some vendors they are going to ask some initiation of advance, some works, contract works, some 10 crores we are giving the some work for vendor. So they will ask some initiation of advance. Okay, so this kind of things we are seeing generally also even our day-to-day activities, right? So that case, while creating the purchase order itself, we can tell the system, okay, this order, so we are going to initiate some advance, means vendor is asking. So that procurement team, they are going to initiate the advance. But whether we are going to make a payment or not, finance team is going to decide. So who will create the purchase order? Procurement team. So they are going to initially dealing with vendors, and the vendor is telling that, so we need some advance. Then procurement team, they are going to propose the advance. Okay. A minute. 1 minute, 1 minute. I think we have some configurations. Okay. See. Okay. So I have some basic setup for XYZ company code. So when I select this down payment option, now system is asking, okay, how much down payment you are going to give. Suppose some 40% we are going to specify down payment. Okay, and when is the due date? So today I'm going to raise the advance. Sorry, I'm going to raise the purchase order to my vendor. So vendor is asking, so I need this material some urgent basis. Then vendor is asking, so if you initiate the advance payment, then only we'll start the delivery process. Then what I can do? Procurement team, they are going to propose to finance team. So for this order, so we need to initiate the down payment immediately. Okay, so they are going to specify. So suppose they are going to raise the purchase order for some so I need this material by 25th. So I'm going to give one material order for 100 quantity. So 1000 rupees. Then PO value is 1 lakh rupee. We'll discuss one end-to-end cycle integration. Okay. So just how some people ask some questions for that. Just I want to show the screen. So if you want, we can run one cycle also. So like that. So I'm going to give the raw material RM100 material to vendor iron 1. So 100 quantity I'm going to give. Assume that each quantity 1000 rupees. So 1 lakh we are going to raise the purchase order. So for this procurement team, they are going to propose 40,000 is the advance vendor is asking. Whether you are going to pay 40% or we are not going to pay. So who is going to decide? Finance team. They will see the budget availability, all those things, right? Procurement team, they don't know, right? So whether we have the sufficient budget or not, but they can recommend because of this material is some urgent to be required. So vendor is telling that this is assume that this is new vendor we are going to raise the order. So he is asking some advance. Then only he is going to start the delivery process. So that case they are going to propose the advance. Then finance team is going to refer this and they are going to process the payment. Okay, these kind of advance payment also we can do through automatic payment program. So there are two cases here payments. One is against your invoices. Already we booked invoice. We have 30 days or 60 days agreement. And for that, we got the due date. So as per due date, we are going to make a payment. And advance case, also we can run the payment through APP. For that, so what is the prerequisite step? We have to raise the purchase orders. In this purchase order, we have to specify the what is the advance we are going to initiate. Okay. So accordingly, system is going to pick the advance. Suppose 40,000 advance we need to initiate to vendor. Okay. Like that, we can run the automatic payment for advance payments or down payments. Okay. And today, so we'll discuss about fixed asset model. So AR is quite opposite. So whatever concepts is there AP, then all the concept we'll discuss in AR. So it is quite opposite. Here we are going to do the purchases, there we are going to do the sales. Here Agnes purchase, we are going to make a payment. Yeah, Agnes sales, we are going to receive the collection. Then here tax is applicable, input tax, sales, it is applicable, output tax. Okay. So anyway, when you go to subject, we'll discuss in detail. So we'll discuss fixed asset model. Okay. So generally, what is mean by fixed asset? Hello. What is mean by fixed asset?
An asset can be used for more than 1 year. Long term usage.
Okay.
Assets we will use to generate the revenue.
Assets used for
Generate the revenue.
to generate the revenue.
Long term.
Okay, your voice is breaking. Okay. Okay, general accounting terminology. Okay, so whatever assets we are going to use more than 1 year for your business operations, okay, we can treat as it is fixed asset. So it is long-term durability. Okay, simple word, you can say long-term durability means that is more than 1 year. These are the accounting definitions. Okay, so fixed asset means it is going to help to business indirectly to run your operations, right? So whatever business operations we are going to do, so this business operations is going to help to indirectly. Okay, suppose I want to do the manufacturing. So I'm running one manufacturing unit. So what I'm going to do here in this manufacturing process, I'm going to buy the raw materials. Okay, then I'm going to produce the finished goods. Okay, if you take one example, manufacturing company. So what we are going to do? So we are going to buy the raw materials and we are going to produce the finished goods. So to produce the finished goods, some production process is required, right? Some manufacturing process is required. So we need to perform some production activities. Okay. So if you take example, I think even first two session or something we discussed. So on that, if you take example, Tata Motors. So what is Tata Motors business? They are going to manufacturing
Sir, voice is not audible.
Sir, it is in mute. Okay. So if you take any manufacturing unit, example, Tata Motors. So what they are going to do? So Tata Motors, they are going to manufacture the finished goods. So what type of finished goods they are going to manufacture? Cars, trucks, lorries, right? JCBs, different motors they are going to manufacture. Example, cars everyone knows, right? So cars everyone knows, Tata Motors, there are so many types of cars. So to produce these finished goods cars, so what they are going to do? They are going to do some manufacturing process. So in this manufacturing process, what they required? They required raw materials. So different raw materials they are going to buy. Okay. So to convert these raw materials, iron, glass, or fiber, so in manufacturing process, they are going to use some fixed assets. They are going to use the machineries, right? Machineries, some vehicles. Okay. They are going to use plant. Okay. Motors, pumps. So these are the fixed assets they are going to use. So here, what fixed assets is going to do, it is going to help to your manufacturing process indirectly for long run, right? In this manufacturing production process, we are going to use the different machineries, vehicles or motors, pumps, right? Some electrical machines, welding machines, okay, cutting machines. There are so many machineries we are going to use. And also to do this manufacturing process, we required on plant. So plant also one fixed asset, right? So whatever plant buildings we are going to use for manufacturing process, that is also one fixed asset. And also this production process activities for tracking purpose, we are going to use one desktop or laptop. That is also one fixed asset. Okay. And some furnitures we are going to use for sitting purpose. Okay. That is also fixed asset. Okay. And transportation purpose, we are going to use some vehicles. Again, that is also fixed asset. So in this manufacturing process, there are so many, okay, machineries or vehicles we are going to use. So those all called as a fixed asset. The difference between raw material and fixed asset, anyone tell me what is the difference between raw material and fixed asset?
Raw material can be processed to get the finished goods. Fixed assets is used for getting the finished goods.
Okay, the main difference is this raw material, it is going to convert as a some other product. Means it is going to convert as a finished goods. See here raw material, iron, glass or something, whatever you are using. All these materials we are going to convert to one finished goods. Right? It can be same day or it can be 1 week time or it can be 1 month time or sometimes maybe it will take 3 months or 6 months time also. But ultimately end of the day, what is the raw material functionality? What is the raw material nature? Is going to convert as a some other product. Okay. But whereas fixed asset, it is going to help to convert this raw material to finished goods. This is the major difference. Everyone is getting my point?
Yes, sir. Yes, sir.
Okay.
Yes, sir.
To convert this all raw materials, whatever business process you are using, to some other product. So in between, we are going to use the fixed assets. It can be machinery, it can be vehicle, it can be plant, it can be furniture, it can be laptop or desktop. If you see the so many all service industries, okay, they are giving the services to XYZ client. Okay, we are giving the employee outsourcing. So most of the people are working in BPOs, right? If people are working for some other client, and if people are everyone is using at least one desktop or laptop, right?
Yes.
Everyone is using
Yes,
laptop
sir.
or desktop for long run business, right? So this
Yeah.
laptop
Yes, sir.
or desktop, it is helping to your business operations long run. Okay, so definitely it is more than 1 year durability. That is accounting definition. Okay, the accounting definition, it is long durability, means more than 1 year. Okay, sometimes materials also we are not utilized more than 1 year, but material we should not treat as a fixed asset. Suppose I am going to buy some raw materials today. Some stocks we are not going to use for the production process. Still we have month ending or year ending some closing stocks. Okay. Still we not use this some of the raw materials for the production process. Assume that this financial year. Okay. Don't treat this raw material. Still we have more than 1 year. Okay. Don't treat this as a fixed asset. But whether you use it or not, later next year maybe April month we are going to start the usage. Okay. Immediately it is going to convert it as some other product. Okay. So this is current asset for the organization. It's raw material, okay, and finished goods. It is current asset for the organization. Okay, raw material closing stock, finished goods closing stock. What is it? What it is? So end of the month or end of the year, you have some raw materials closing stocks. So what we are going to treat these raw materials? We are going to treat as it is current asset for the organization, closing stocks. Similarly, we have finished goods closing stocks. Okay, everyday basis we are going to manufacture some finished goods and we are going to sell the same month. Okay, some of the products still we have the stocks. Okay, this all are we can treat as it is current assets. And for this process, all your business process, front end or back end, so whatever other machineries or vehicles, laptops, desktop, furniture, buildings, whatever we are using, these all are we are going to treat as a fixed assets. Okay, so this is the major difference. Sometimes logically we'll get this kind of questions when you go to interview. Tell me just what is the difference between material and asset. Okay, should be able to tell some logical answers. Okay, and some people they are going to ask question why we are going to consider materials as a current assets. Okay, so until use this material, so we can treat as it is current assets, closing stocks. So we are going to show you in the financial statement also, where we are going to show this closing stocks in your financial statement.
Balance sheet, current assets.
Under balance sheet,
Current assets.
under assets, current assets column we can show, right? Okay. So here in this process, manufacturing process, I'm going to use some machineries. Okay. So I can use some vehicles. Okay. I can use some laptop or desktop. So I can use buildings. Okay. And maybe sometimes we have the land. So company having the land. So maybe next year or somewhere we are going to plan for the construction of new plant, or we are going to plan for the open the new branch. We are going to start the construction of building. So first we'll go to buy the land, right? So these all are what we are going to treat. It is fixed assets for the organization. Land, building, laptop, machineries, vehicles. Okay. These all are we are going to consider as fixed assets, machineries, furniture. Okay. some servers, batteries, Xerox machineries. There are so many things. Okay, we'll treat as a fixed asset. And fixed assets, just now we try to understand. We understand it is going to help to your business operations indirectly. Okay, and these fixed assets also we have some lifespan, right?
Yes.
So fixed assets also we have some lifespan. Suppose if you take laptop, how long we can use?
3 years.
3 years, 4 years, 5 years. Okay, depends on the working condition. But so as per accounting, as per legal requirement, okay, so what government will tell? It is 3 years is the useful life. Okay, the life of the laptop is 3 years. Okay, so if you take example laptop, so as per legal requirement or accounting requirement, so India it is 3 years is the useful life. And vehicles, example, assume the 10 years. Furniture, 5 years. Machineries, assume that some
10 years.
okay. Example, I want to take 10 or 20, 15, like that. We have the life. Buildings,
50.
60 years. Land,
No life.
okay, it is not applicable, right? It is not applicable any lifespan. Okay. So like that, we have the certain period of time useful life for these assets. So means more than 3 years also we can use the laptop, but so we have to see the performance. As a personal, okay, generally we are going to use 3 years, 4 years, okay. So you have to think about the office purpose. So some companies, if you observe, after 3 years, 4 years, they are going to replace the new laptop. Even the old laptop, it is it is a working condition. But even though what they are going to do, so they are going to replace the new laptop for the employees, right? So I seen mostly after 4 years they are going to replace most of the companies I see. Okay, some companies still until that work laptop is working condition, so they are going to use after that they are going to replace the laptops. Then suppose this laptop, so we purchase for some 60,000 rupees. Useful life is 3 years. Then, so end of the life, this asset value is going to reduce, right? Any asset.
Yes.
So it is going to use for the business operations. So after 3 years or 5 years, 10 years or 20 years, the asset life is going to end. Means the asset value it will reduce. End of the life, the asset value is 0 or something. Still we have the value of asset is 60,000. Assume that this is the 60,000 laptop we are going to buy today. So useful life is 3 years. Then after 3 years, what is the value of this asset?
0.
Still it is contained 60,000 or it is reduced to some amount or it is reduced completely.
Scrap value.
It will become 0, sir.
It will become say 0. Okay, that book value will be 0. Then, so initially it is asset for the organization. So we are going to show in your financial statement under balance sheet item under fixed asset column. Then this value reduction where we have to show. You have to show in your books, right?
Yes, sir.
Hmm?
In profit and loss account as a depreciation.
Asset value is 60,000 when we purchase the laptop. Then, so after 3 years, this asset value is 0. Means, assume that 2021 we are going to buy, then 2022,
24 at the year end of 22 we are
okay. So 3 years is the useful life. Then after 3 years, this asset value, book value is, net book value is 0. Okay, means this some value is reduced. So this value reduction, so it is expense for the organization, right?
yes sir.
So this value reduction we are going to treat as a in SAP
Depreciation.
or accounting terminology. What will treat?
Depreciation.
Depreciation. In accounting terminology, we treat as it is depreciation. And when we have to charge the depreciation?
Year end.
Year end
Or month,
year
month end.
start or end of
At
the
the time
life.
of preparation of financial statements.
So when you have to book this depreciation, we have to treat as it is expense for the organization. Depreciation is the expense or loss for the organization, right? When we have to book this depreciation.
Yes, sir.
Hmm? So when we'll book this depreciation?
At the end of the financial year.
End of the
At the
financial
end of-
year or end of the 3 years or start of the 3 year means
End of the
purchase
financial year,
asset.
sir.
Hmm?
End of the financial year.
End of the financial year. Okay. So means end of the 2021. Assume that this asset is purchased April 1st, 2021. Okay. So that is called as a okay. I will mention all the details. Okay. Asset to value. Nothing but purchase value. And so we are going to capitalize this asset, right?
Yes, sir.
We have to purchase the asset and we have to capitalize the asset. Assume that this asset is capitalized April 1st, 2021. Okay. Then life is 3 years. It's already mentioned here. So useful life is useful life of the asset is 3 years. Okay. Then so end of the 3 years, this asset value becomes a net book value becomes a 0. Okay, 2023, this asset value becomes a 0. Okay, so then the starting, when you purchase the asset, the net book value is 60,000. Okay, we capitalize the asset and we specify the asset useful life is 3 years. Okay, so someone is telling that we have to start the depreciation yearly once. Okay, assume that end of the financial year 2021. So what is the depreciation amount?
20,000, sir. Every year 20,000.
So how we are going to calculate depreciation?
Asset value minus residual value divided by useful
Asset
life of the
value
minus scrap value. Scrap value here 0 divided by useful life
okay,
of the
as of now, don't do consider scrap. Okay, scrap also one component. Okay, just simple calculation we will do. So,
asset value divided by
so many
useful
people are
life of the asset.
freshers. Okay, it is very difficult to understand them. Okay, so useful life of asset is 3 years. So depreciation, there are different depreciation calculation methods is there. What are the depreciation calculation methods is there?
Straight line method, return value method, present
Okay.
value factor, annuity factor methods.
1 minute, 1 minute. We have different depreciation calculation methods. One is useful life method. Okay. So another one is SLM percentage method, straight line method, and another one is WDM percentage method. So broadly, we can classify percentage method, useful life method. So under percentage, again, we have SLM method and WDV method. And as per New Asset Accounting Act for India, so most of the companies is going to use the useful life method. Okay, before 2013, New Asset Accounting Act for India is the New Asset Accounting Act. As per New Asset Accounting Act, so we can charge the depreciation for your assets useful life base. Okay, still some people are some companies is going to continue SLM method, WDV method, but recommended method is useful life method. Okay, and before that, I seen some of the projects all methods they are using. So one of the project I seen completely they are using useful life method. Any asset, it can be building, it can be vehicle, it can be laptop. So all assets they are going to use useful life method only. But the parallel I work on another project, but those people are still they're using life method, SLM method, WDV. Okay, but whatever method they want, so no issue. So our job is in SAP how to calculate each method. So we are going to learn the all 3 methods. Okay. So if you take example useful life method, so how we are going to calculate the depreciation? Asset to value by useful life. Useful life method, what it is telling? Asset value by number of years. So here, what is my asset value? 60,000 by 3 number of years. Then how much is the depreciation amount? 20,000. Then what is the net book value end of the first year?
40,000.
40,000. Net book value nothing but acquisition value minus depreciation value will get the net book value of the asset. Then second year, same asset
Again,
value by 3 years. Then what is the net book value?
20,000.
20,000. Then again third year also 60,000 by years.
0.
Net book value is 0. Okay, is the life method. So similarly percentage method, if you go, what we can do? So whatever percentage you want to calculate the depreciation on your asset value, we can calculate the tax depreciation rates. Okay, WDV. What is the difference between these two, SLM and WDV?
In SLM method, depreciation for every year is the same.
Okay.
And historical cost value. In WDV method, it is charged on net asset value.
Okay, so it is the difference is SLM method means it is straight line method. So it is going to calculate always on your purchase value. depreciation. Suppose I want to calculate the 10% depreciation. SLA method. So assume that WDV also 10%. Okay. The percentage is same, but calculation part is different. Suppose if you take SLA method, how it will works. I want to calculate 10% depreciation. Okay, so always SLM method is going to charge the depreciation for first to 2021. I will mention here. Okay, if you go by as per SLM method, what system is going to do? System is going to calculate the depreciation always on base amount or purchase value. What is your purchase value? 60,000. So on 60,000, so how much you are going to charge the depreciation for the first year?
6,000.
60,000 into 10%. It is 6,000. Okay. And second year,
Same.
again on your purchase value into 10%. Okay. Then third year, again, always you are going to calculate the depreciation on your purchase value. Okay. So here depreciation amount is the constant for all the years. Yeah. Other words you can say. So the depreciation amount is unique or constant for the all years. Whatever years you are going to calculate the depreciation. See, 2021 6,000, 2022 6,000, 2023 also 6,000. Like until your book value becomes a 0. Always system is going to calculate the depreciation on your base amount. Okay. This is clear, everyone? On base value, we are going to charge the depreciation on base value. Simple understanding. Purchase value of the asset. Okay. It will calculate like this. And whereas WDV method, percentage is same only. But here we are going to calculate the depreciation. The initially net book value is same. So it is going to calculate the depreciation on what? Which value?
First 60,000 into 10%.
Net book value on net book value. So the first year, what is my net book value? 60,000. On 60,000, 10% means
6,000.
6,000, sir.
it is 6,000 only. Then coming to second year.
54,000.
So 60,000 minus 6,000. Already we have first year depreciation, right? So what is your net book value? 54,000 into
54,000.
10%. Something wrong it is coming. 60,000 minus 6.
Bracket, we have to close bracket for the
Where we have to put bracket?
60,000 at the starting of 60,000 and 6,000
Here
and 6,000 into 10.
now it is coming correct. Okay, so on net book value we are going to calculate the 10% depreciation. So now it is coming 5,400. Then third year
50.
so 60,000
No, sir.
minus first year depreciation 6,000 minus 5,004 second year.
Yes, sir.
Okay, into 10%. Is 4,800. So here the depreciation amount is going to reduce year by year. Here it is constant, here it is reducing. So that it is calling as a straight line method. Okay, so depreciation amount is unique for all the years or it is constant for the all years. But whereas WDV method, so the depreciation amount is going to reduce year by year. So other words, it is going to call it as it is declining balance method also. Okay, these are the different calculation methods we can use. Okay, but whatever method we are going to use, okay, so we are going to charge the depreciation first for the year, and so when we have to book, okay, this is the depreciation amount for the first year. Okay, so 20,000. For 2021 financial year, we are going to charge the 20,000 depreciation. So when we have to book this depreciation amount in your accounting, you want to book this is depreciation amount end of the financial year, or start of the financial year, or mid of the financial year? How we can book this depreciation into your accounting?
End of the financial year, sir, at the time of preparation of financial statement.
End of the financial year. Okay. Assume that end of the financial year means is 12th period, right? What is our main objective of our financial statements? What is the objective of accounting? We have to prepare
Financial statements.
financial statement. So I think second class. Okay. So part
Schedule
of
two.
our core module is FICO. So under FICO, we have FI and CO. So FI is main objective is okay,
Finance.
accounting. So accounting, what is the objective of accounting? To prepare the financial statement. So part of financial statement, what we are going to do? We are going to prepare profit and loss account statement and a balance sheet account statement. Okay, and this financial statement generally we are going to prepare for to external reporting purpose. So as per your registered company ROC rules and regulations, what I told, so we have to submit this financial statement ROC means Register of Companies Act, Income Tax Department, and
Other statutory obligations.
okay, if it is IPO listed companies share, so we have to submit to SEBI. And when you are going to submit to these all departments, your financial statements.
After the approval by the board.
End of the financial year, right?
Yes,
But
sir.
if you see the your some news, everyday newspaper or business news, anyone having habituate of seeing the newspaper?
Yes,
If
sir.
you see one page is there in newspaper, every newspaper, business page is there. If you observe the business place, so we are going to see after first year, first quarter, 3 months. So this company is going to announce their financial statement. First quarter, this much is their revenue turnover, this much is the profitability, and Okay, today these are the companies, they have board meetings, first quarter board meetings, they are going to announce the result tomorrow. Like that we are seeing this news, right?
Yes, sir.
Anyone is observing these newspapers?
Actually, I saw say SBI's financial statement.
Okay, so every company, big MNCs, if you observe, even you can see the new channels also, they are going to announce their financials quarterly also. Right? Q1 result, Q2 results, they are going to announce. And maybe sometimes what will happen, last year, some companies, they are getting the losses. And this year, first quarter, they got the good turnover, good revenue, good profitability. Why they are going to announce the quarterly result, big MNC companies?
You know their quarterly performance.
So they are going to announce the quarterly result also. Okay, they are going to announce their quarterly results. So what is the advantage? Is there any advantage by announcing this quarterly result? So and so company, first quarter, they got 100 crores turnover. Okay, so profit percentage is 10%. Is there any advantage of this by announcing the financials?
Yeah, it will attract the investors.
Okay, yes, there are so many advantages is there. So maybe sometimes what will happen, somehow last year my company is running the losses. Assume that 2020 year, some companies, maybe some exception reason, it is running the losses. Okay, if I continue this trend, okay, if I am not going to announce my finance year till 2021 end, what will happen? So your goodwill will reduce. Okay, so we'll lose some projects. Some companies, they are going to give the projects. They were thinking this company is running the losses last year. Maybe this year we'll get some other losses. Okay, will reduce the reputation in the market, right? So what they are going to do, every big MNC company, so they are going to announce their finances quarterly. So 2021, if you announce your results Q1, other that Q1 we are getting some 100 crores profit, then it is going to help to management company, so increase the share value, to get the investments, to attract the investors, stakeholders, right? So it will attract to shareholders, investors, right? Your company goodwill also will increase. Everyone is getting my point or not? Hello?
Yes, we understand.
Yes, sir.
Okay. So if you announce your result quarterly basis, okay. So if your company is running the good turnover, revenue, profitability, then automatically it is going to help to your company in 2021 financial year to get the more investment, some new projects, okay, and as well as goodwill. So even if you want to get the loans also from bankers, so it is going to help all these your results. Then if I want to announce my result, so you have to prepare your financial statement first quarter also, right? End to end. So generally we are going to prepare the financial statement end of the year. But if you want to announce your financials market quarterly basis, then you must prepare your financials with accuracy data for the first quarter, right?
Yes, sir.
Then if you want to prepare your financial statement first quarter, if you want to see what is your net profit or net loss, then you have to include each and every expense and each and every revenue, right?
Yes, sir. For that quarter. we
For
have to
first quarter, if you want to announce your result, what is your company turnover, revenue, and what is your loss or profit for your organization for first quarter, then we have to prepare end-to-end accounting. Then if you want to prepare end-to-end accounting, you should consider your company each and every expense, revenue, assets, and liabilities, right? Then, so depreciation also, it is expense for the organization, right? Suppose
Yes,
if you are going to run the depreciation yearly once, means if you are going to run the depreciation, charge the depreciation end of the financial year, then you miss this depreciation expense for your accounting for first quarter, right? You will miss
no,
or
sir,
not?
we have.
If you miss the expense, depreciation is the expense for the organization. If you miss the for first quarter, then what will happen? So your financial statement, it is showing the more profitability.
Yes.
Similarly, second quarter also, you are missing the depreciation portion. Your company is showing the good profitability. Third quarter, again, it is showing the good profitability. And suddenly, last quarter, it is showing the huge losses. Why? Because we are going to book the all depreciation end of the financial year. Right? First
Yes,
quarter we not yet booked, second quarter we not yet booked, third quarter we not yet booked. So all these 3 quarters, it is showing some good profitability. Some second quarter 110 crores. Okay, third quarter 110 crores. It is showing the good profitability. Suddenly, last quarter maybe it is showing some 50 crores loss. Maybe the reason depreciation we are booking the all complete all 12 months depreciation we are booking into the last month of the financial year. So depreciation is the huge amount or small amount for the big organizations?
huge amount, sir.
It's huge amount, right? So big machineries, buildings, vehicles. Okay, so it is crores of money. If you are not going to consider this depreciation amount to monthly or quarterly, then the whatever financial year you are preparing for last 11 months, it is not 100% accuracy data. Okay, whatever you prepared financial statement, it can be management purpose or it can be so this kind of financial reporting purpose. So quarterly, some big companies, they are going to announce their financial years. Whatever data they prepared, it is not 100% accuracy data. Okay, if you follow like this accounting, then the problem is, so end of the financial year, we'll see the different results. Okay, last 11 months, what management is thinking. So my company is running the good profitability. They are not going to much dig on what are the areas actual cost is happening for the organization. Okay, everyone, management, even operational team, everyone is thinking. So our company is running the good profitability. So no need to worry, no need to worry. So suddenly what happens? 12th month, 12th period, it is showing the huge losses. So when you go for detailed analyzation, we come to know. So we miss the depreciation for last 11 months and 12th month we booked all depreciation. So because of this reason, so it is giving the negative results. Okay. So for that, what we need to do now? Depreciation, it is one of the month ending activity, not year ending. Okay. So we'll calculate the depreciation for the whole year. Then the depreciation amount we have to post each month. Okay. Monthly we have to book the depreciation. So then what we need to do is 20,000 April 2021. May 2021 to 2021, like this. March 22. So this is the year depreciation, right? Whatever depreciation amount we got for the 2021 financial year, that amount we have to split into number of months. Okay. Similarly, for all months, we have to charge the depreciation and we have to book into accounting. So then every month, see, this is one asset value, one laptop amount it is. Like that, if you have 1,000 laptops, what is the monthly depreciation? Assume that this is one laptop depreciation into 1,000. This much is the depreciation we are missing for the month. Okay, how much? 1,66,666. This much we miss the depreciation amount for the April. If you follow the year ending process, yearly, if you are trying to book the depreciation. So some people, maybe they can book quarterly also, but most of the MNC companies, they are going to charge the depreciation monthly basis. They are going to do accounting depreciation also monthly basis. Okay. You got some idea? Fixed asset. So fixed asset means is going to help to your business operations long run. So over the period of time, this asset's value is going to reduce. Okay, the value reduction only in accounting we are considering as a depreciation. Okay, then how we are going to charge the depreciation? First, how to calculate the depreciation for the year? Step 1. Then the depreciation, how you are going to book into your accounting, whether you are going to book into monthly or quarterly or year. So most of the companies, means MNC companies, they will book into accounts monthly basis. Okay, so and these are the calculations we want to get from system automatically. So big MNC every day they are going to buy hundreds of laptops. Right? So if you see big MNC companies, they are going to recruit the daily basis use employees. Then whoever employee is going to join, definitely your employee is required at least one laptop or desktop. Monthly or weekly, at least 100 laptops or 200 laptops they are required. Okay. So we are going to create one asset ID for that, and we are going to post the purchase entry. Then system should start the depreciation calculation and month ending. So if we have 100 laptops or 1,000 laptops, whatever laptops, all laptops, we have to run the depreciation single shot. We are not going to do any manual depreciation calculation. Just we are going to tell the system what is the depreciation percentage for this asset. Okay. So in SAP, what we are going to do, we are going to configure the depreciation calculation methods. What is our job here as SAP consultant? These are the front-end activities business is going to perform, and this all calculation they are looking automation. So for that, what we are going to do, backend, we are going to configure the depreciation calculation methods. The business want useful life method, we have to configure the useful life method. The business want to SLM method, we'll configure the SLM method. WB method, WDB. And also, they want different percentages. SLM maybe they want 10%. So another asset they require some 10%, 15% or 20%. Okay. Some of the assets they want to some 25% of the depreciation. Okay. So like different calculation methods business want. So whatever project you are working, whatever country you are working, as per business requirement, we have to configure these are the depreciation calculation methods. Like AP, we discussed one topic, payment terms. So we understand, right, how payment terms is going to help for your invoice due date calculation. We have some vendors 30 days payment terms. We have some vendors 60 days payment terms. Few cases we have the 90 days payment terms. Okay, and this all AP cases. Similarly, here also. So this payment terms, it is going to help for business to calculate the due dates, invoice due dates. Every day we are going to book the hundreds of invoices, thousands of invoices. It is very difficult to do the manual calculation of due date, right? So we understand this process, right? In AP and DR, how it is going to help. Similarly, in fixed asset module also, so our main role is as SAP consultant, where we can configure the depreciation calculation methods. Okay, what are the methods we have to configure? Then how we can utilize this depreciation calculation for your assets. Okay. Same way in fixed asset module, depreciation calculation methods is key role. So we have to configure, and also this is depreciation calculation is country requirement, country specific activity. Okay. So country to country it can be differ. So India, maybe we have different calculations as per Indian government. So US it can be different, UK it can be different. It is country specific activity like tax. Tax also it is country specific activity, right? GST, TDS. Similarly, fixed asset depreciation calculation also it is country specific activity. Okay, if you know the how to calculate all this process, so whatever project you're working, whatever country you are working, so business will give the all requirements as per their country. We cannot learn all across the global, all countries taxation, all countries TDS, all countries depreciation calculations, right? That is not our job, right? As SAP consultant, our job is how to bring this calculation through system. Okay. But if you have a little bit idea about that particular country legal requirements, it is easy for configure the system. Otherwise, we have to start scratch level onwards. Okay. This is one part. Okay. So I'm going to charge the depreciation for laptops. Similarly, we have buildings, we have machineries, we have furniture, we have vehicles. Then these are the depreciation. So maybe laptops, we want different calculations, machineries, we want different calculations, buildings, we want different calculation. And whatever value we are going to charge the depreciation. So finally, this value should goes to your accounting, right? Finally, this value should goes to your accounting or not? Then what is the accounting entry? First, what is accounting entry at the time of asset purchase? First, we have to purchase the asset, right? Then we have to capitalize the asset. Then we'll start the depreciation. Then what is the accounting entry when you are going to purchase the asset?
Asset account data to purchase, cash account.
Asset account debit.
And cash and bank will be credit.
What is this? What is this? Hello? Others, what is the accounting entry?
Asset account data to banks if you are paying in instant this one.
Suppose I'm going to buy one machinery. Machinery account, debit. Suppose 1 lakh asset I'm going to purchase. And we should have the equivalent.
And if
Credit.
any like installation charge everything, then that also we can.
Okay. Machinery account debit 1 lakh. Credit to 1 lakh. So we are following the dual accounting system. So then, which account is going to credit 1 lakh?
Bank only. Bank, sir.
Bank.
Bank.
Then asset, fixed asset debited, bank credited. To whom we are purchasing this asset?
To the company. Company.
Which company?
So for our
Our company or some third party?
no, for our organization.
That is okay. Our organization we are buying. To whom we are buying this asset?
To us only.
Sorry.
To whom we are purchasing this asset?
From vendors, individuals.
To
Vendors, individual thing.
I'm not clear your voice. If you don't, someone is telling again and again same accounting. If you are going to say machinery account debited, bank account credited. So where is your vendor? So we are going to buy this asset from vendor only, right?
Yeah.
If you are not going to include your vendor, means there is no AP at all.
Yeah. Sorry. Yeah.
Asset debited, bank credited. Where is the AP model? No
Yeah,
vendor, no AP. No vendor reports. No vendor payment. Last 2 classes we discussed this only.
Yeah. Sorry. Yeah.
Then again you are telling same accounting. Should have something improvement day to day. The first day, okay, maybe you don't know basic accounting fundamentals, you know, debit credit. Your golden rules, it will not help. Okay, it will help, but that golden rules we have to apply for the business process. Okay, so if you follow the golden rules, maybe your golden rules, what it is telling, what comes debit, what goes out credit. So here debit credit balance is matching fine. But where is your vendor? Something you are purchasing means you are purchasing from third party. If don't involve your third party, okay, it means you are not involving your vendor, means there is no AP. There is no vendor report concept. There is no vendor payment concept. There is no tax. We discussed tax also. We discussed GST entries. We discussed TDS entries. So everything we are missing. Okay. So always you have to include your vendor. ABC vendor account to credit. So any taxes is applicable again. Tax is going to debit. Okay. So this is the purchase entry we are going to book. And so you want to show these values in your financial statement or not? Your asset value you want to show in your financial statement or not? This is the fixed asset, right? And what about this vendor?
Liability.
It is liability. Means it is current liability for the organization, right?
Yeah.
Immediate payables are future payables. So short, or else we can say short-term payables.
Short-term payables.
So means we have agreement with this vendor 30 days or 60 days, 90 days payments. So as per that, we are going to make a payment. It is means short-term payables. So we'll treat as a current liability for the organization. And how we are going to show these values into your financial statement? You are going to show each and every asset to balance in your financial statement. Similarly, each and every vendor balance in your financial statement, or how we are going to show these values in your financial statement. The main objective of financial accounting is to prepare the financial statement, right? The objective of accounting to prepare the financial statement. So this entry, how we are going to show in your financial statement?
So machinery will show in asset side in balance sheet.
Asset side means you are going to show your fixed asset in your financial statement, or something
Fixed
which you
asset.
are going to show?
Fixed asset.
Fixed asset.
Yeah, so the vendor balance liability will show in the current liability.
Means each vendor wise balances you are going to show in your financial statement. Each asset wise and each vendor wise you want to show in your financial statement, right?
Yes, sir.
Others?
No, sir.
What is the
If you
difference?
show each vendor wise or if you show each machinery wise, it will be lengthy.
Yeah.
It is not necessary to show each.
So if you try to show in your financial statement each asset wise balance, each vendor wise balance. So if you see the big organizations, they have thousands of vendors, okay, thousands of customers, thousands of assets, lakhs of assets, right? So assume that one big MNC company, we have 50,000 employees, means we have 50,000 laptops or desktops, okay, and 1,000 chairs, vehicles, buildings, lakhs of assets is there if you see big MNC companies. Then if you try to show your all fixed assets and vendors into your financial statement, what will happen?
This statement will be too long.
Your financial statement too becomes a vast information. Financial statement means it is summarized version of your accounting, right?
Yeah.
Is summarized version of your accounting. Then if you try to bring all your vendors and customers, thousands of vendors, thousands of customers, thousands of assets or lakhs of assets, if you try to bring into your financial statement, your financial statement, it can be 1,000 pages or 2,000 pages, 5,000 pages, right?
Yeah.
But if you see any financial statement, you can Google it also. It is summarized version. Okay, it can be 5 pages or 10 pages maximum. Okay, so all final figures we are going to show. Then if I try to bring all my vendors, each vendor wise, customer wise, asset wise balances into my financial statement, my financial statement becomes a vast. Then how I can show these balances into my financial statement?
No statements under one schedule, sir.
Sorry?
Sundry creator ledgers in ledger. Subledger.
Okay. So in accounting, vendors, assets, customers will treat as a subledger. Okay. What is the main ledger? I asked this question first today, first session. Some background noise is coming, someone. Can you put in mute? So, for that only, we are not going to show each asset wise, each vendor wise, each customer wise balances in your financial statement. So, we are going to consider vendors, customers, and assets as a subledger. And what is main ledger?
Asset.
GLs.
What is main ledger?
GL account, sir.
Your main ledger is GL account. Okay. The main ledger is GL account here. So vendors, customers, assets is the sub ledgers, and GL is the main ledger. So what we are going to do? Maybe you have here 100 vendors or 1000 vendors or 10,000 vendors. All these 10,000 vendors or 1000 vendors we are going to map to, we'll create as a sub ledger, because of we want to see each vendor wise balances, right, in the AP report. I shown yesterday one report, right? So we can see vendor wise what are the invoices we have and how much amount we have, when is the due date. Like that, if we have 100 vendors or 1000 vendors, we want to see the report. So for that, what we can do, each vendor we can create as a sub ledger. But I want to show these balances into my financial statement, all my vendor balances. So what I can do, I can map to one main ledger is here, that is sundry creditors. Okay. The main ledger is GL. So main ledger we are going to create sundry creditors. Similarly, so here we are going to, sometimes we are going to buy multiple assets, right? Not only single asset. Suppose I'm going to buy n number of assets here, machinery 1, machinery 2, machinery 3, like that also we can buy, right? Is it possible or not? At a time we are going to buy the multiple assets.
Yeah.
I'm going to buy some 5 machineries. Example. Machinery 1 account, machinery 2 account, machinery 3 account, machinery 5 account. So then that I'm going to buy the at a time 5 machineries. Then each machinery, assume that value is 1 lakh rupee. Then what is the credit now? 5 lakhs. I'm going to buy all these machineries from ABC vendor. Okay. So I want to track each machinery wise. So that what I'm going to do, so I'm going to create 5 asset codes. Okay, I'm going to create 5 subledgers. Nothing but that is my asset codes. So then I can give each asset wise how much is the purchase value. Debit, debit, debit. Machinery 1 lakh, machinery 2, like that 5 machineries I'm going to debit, and the credit is ABC vendor. Then this all balances we need to map to one main ledger. So today I'm going to buy 5 machineries. Again, after next month I can go on to buy another 10 machineries. Okay, next financial year I can go and buy the 20 machineries. Whenever I'm going to buy the machineries, I will create one subledger for that. Each machinery I will create as a one subledger. So all these machineries I'm going to map to one GL account, that is machinery I will create one machinery GL account. Okay. So everyone is getting? What is the difference between subledger and main ledger?
Subledger which consists of individual asset accounts and individual
Subledger, it is going to help
manager
individual account wise tracking. I have 5 machineries. I want to track each machinery wise. Today I'm going to buy. Tomorrow what will happen? I don't know. Maybe after 1 month, 2 months, 3 months, 5 months, one machinery is some accident is happened. some fire accident, something, it is damaged, then I have to scrap that machinery, right? If I club all together one asset code, then how we can classify? Maybe I'm going to buy these 3 machineries for Bangalore plant. These 2 I'm going to send to my Hyderabad plant. Right? Possibility is there, right? So if I want to track each asset wise, what is my asset purchase value and when it is capitalized, where this asset is located, then so tomorrow something is going to happen for machinery 1 or 2. Okay, assume that some exception reason, some accident is happened, fire accident or something, some earthquake is happened, national disaster, or some floods came, some location, some assets is damaged, then I have to scrap those assets. Okay, and also if you see, if you know, each machinery, generally we have the insurance, right? Whatever machinery is damage happened, we'll go for the claim for the insurance, right? So for that, better to have the separate asset to code for tracking, right? If you create all machineries as a one asset code, it is difficult for the tracking. Okay, so for individual asset tracking purpose, what we can do, we can create 5 asset codes. So these 5 assets codes we can treat as a sub ledgers, sub accounts. Okay, similarly today I'm going to buy the machineries from ABC vendor, then again tomorrow I can go and buy from these machineries. Next month I'm going to buy another 10 machineries. I can buy from the XYZ vendor. Okay. Then, so this ABC vendor, I'm going to buy ABC vendor, I'm going to pay as per my payment terms. Yesterday we seen, right? ABC vendor, we have 30 days payment terms. As per 30 days payment terms, I have to make a payment to this vendor. But XYZ vendor, we have the 60 days payment terms. As per that, we have to make a payment. Maybe assume that when I'm going to raise the purchase order to XYZ vendor is asking some advance. Assume that I'm going to insert some advance 2 lakhs. Then if I want to track each vendor wise, any advances is there, what are the outstanding invoices, when this invoice is due date, how much is the due date. If I want track, better to have the separate ledger account for each vendor, right?
Yes.
Better to have each vendor as a one separate ledger account. Okay, but in financial statement, I don't want to show all these accounts. Like this, I have 100 vendors or 1000 vendors. I don't want to bring all these vendors, their balances into my financial statement. For that, what I'm going to do? All these vendors, I'm going to map to one main ledger, that is my sundry creditors or trade payable. So nowadays, everyone is going to use the word trade payable. Okay. So for that only, I asked one question. I think to end of the first demo or second demo, is there any difference between GL and other ledgers? Okay. So GL is the main ledger. Vendors, customers, assets are the sub ledgers. Okay. This is the one reason, because of with reference to GL only, we are going to prepare our financial statement. In our financial statement, we are not going to bring each and every asset to our vendor customer balances, but the totals we are bringing. How? By mapping one main GL account. Okay. And also, second reason, why we are not going to bring your vendor, each vendor wise, customer wise balance into financial statement. So vendors and customers is third party. It is not permanent for your organization, right? This year I have 1000 vendors or 5000 vendors. Next year, I'm not sure how many vendors we are going to continue the business and how many new vendors is going to add. Similarly, customers also. This year I have 10,000 customers. Next year, I don't know how many customers will continue the business with us. Okay, any new customers we are going to add. So keep on, this is going to add and remove process. Okay, if I simply try to bring it to this all vendors and customers into my financial statement, So next year, so many vendors. Sometimes we have vendor, but we not yet done any business this year. Unnecessarily, all these vendors, it is going to show in your financial statement blank records. Okay, some of the vendors we drop the business, customers we drop the business. Some of the vendors we not yet done any business this year. Okay, so all blank records we can see in the system. Okay, this is another reason we are not going to bring each vendor wise, customer wise balances into your financial statement. Okay, these are the two reasons. Someone is going to ask in interview also, what is the difference between GL and or they can ask questions like this, what is the difference between main ledger and sub ledgers? So sub ledger examples, we can say vendors, customers, assets. Even asset also, vendors and customers, it is not permanent for the organization. Similarly, asset also permanent or it is also temporary. Assets, it is permanent for the organization or it is also temporary.
It's temporary, it's up to the end of their useful life.
It is only long-term durability. So here I mentioned it is also having the some lifespan. Even building also after 6 years, we have to collapse the building and we have to construct the new building. Maybe today this building cost is 10 crores. We are using this building for your business operations to 10 years, 20 years, 30 years, 50 years. Then after that, we are going to construct the new building. We are going to collapse the complete building. So the building value is 0. And we are going to construct the new building. Maybe this building cost is 50 crores or 100 crores. Okay. So fixed assets also, it is not permanent for the organization. So if you see the big organization, they have lakhs of assets. Okay. So these all assets also, assume that today I have 1,000 laptops or 10,000 laptops. After 3 years, this all 3,000 laptops, it is going to scrap. And I'm going to buy the new laptops. And we have to create separate asset code for new laptops or we'll continue with the existing code. Today I have 1,000 laptops. Assume that I created 1,000 assets codes in my system. Assume that after 3 years, all 3,000 laptops is scrapped. I'm going to buy the new laptops. We need to create new asset code or we can continue with the existing code.
Create
New one.
New one. Why?
this thing is already
It is scrapped.
It is-
So it is having some historical information about that laptop. When this 1,000 laptop is purchased, means what is the value of the each asset, when this asset is capitalized. Okay, when this asset is life is going to end. Okay, and the end of the what is the net book value. So all this history we are seeing last 2-3 years for these 1,000 laptops, and whatever new laptops we are going to buy. Okay, suppose today 1,000 laptops, it is Dell laptops I have. So maybe after 3 years I can buy Dell laptops or HP laptop or Sony laptops, some other laptops, right? MacBooks. I cannot utilize the same code. And also the new laptop capitalization date is different. The new laptop, my asset purchase value is different. Okay, maybe I don't know after 3 years any government come up with some different depreciation calculations. We are not sure, right? So better to create the again 1,000 or 2,000 new laptop codes. Like that, keep on new assets we are going to buy, old assets we are going to scrap. So if you see the big organization, there are so many assets, lakhs of assets also. Okay. So what we will do, we are going to do all these assets, we are going to map to your one main GL account. Okay, I'm going to buy like this 5 machineries. Then similarly, I'm going to buy the laptops. Okay, when you are going to buy the laptops also, what we are going to do, each laptop will create as one asset code. So assume that this laptop, each asset laptop value is 60,000. laptop 2, laptop 3, laptop 4, laptop 5. Okay, so assume that I'm going to buy the Dell laptops. Then who is the vendor? It can be Dell, or maybe sometimes you are going to buy from dealers, right? Promo or something. Okay, so directly you can buy from the Dell, then it will come Dell as a vendor, right? Or if you are going to buy some through online, okay, Amazon or Flipkart, or you are going to buy some Chrome, okay, so your vendor will be different. And how much is the payable? 3 lakhs. Okay, each asset, each laptop we are going to create as a one asset code. So we are going to specify the amounts, each asset, what is the balance, what is the asset purchase value, and this is sub ledger, and what is the main ledger? Will you separate GL account for laptops, or we can continue with the machinery? We'll use separate GL account for laptops. Okay, we can create as a like IT hardware GL account or electronic goods. Something will create one GL account for this. We'll create one GL account. Okay, we'll create one GL account, electronic goods. Okay, whenever you are purchasing laptop, desktops, any monitors, all together, I will treat as a electronic goods. Okay, and here machinery GL account. Okay, and if you are going to buy some vehicles, cars or bikes or something, then again, so each vehicle account is going to debit and credit some Honda cars or some Tata cars, something. So again, all vehicles will create one separate GL account. Okay, here what we are going to do. So this is called as a asset groups or asset classes. In SAP terminology, we are going to call it as it is asset class or asset groups. Each asset category or asset class, we are going to create one main ledger, one main GL account. Okay, land will create one GL account. Building will create one GL account. So maybe we have 4 or 5 buildings. Bangalore, I have 1 or 2 buildings. Chennai, I have 1 building. Hyderabad, I have 1 building. Okay, each building wise, we will create one sub ledger. So maybe Bangalore building we have 50 crores. Hyderabad building we have 60 crores. So altogether, we are going to map to one GL account. This is main ledger. Here I can create 4 or 5 building codes. Each building wise, when is the capitalization date, what is the building value, I can mention. And all these GLs I can map to one GL account, that is building. So maybe here 200 crores my building value. Okay, similarly, machinery GL. Okay. Furniture GL. Okay, vehicles. Electronic goods. Okay. So any other asset category is there, we can create. So more asset groups or categories, and we can create one GL account for each asset group. Okay, these are the main ledgers. So for this main ledger, it can be one building or many buildings. It can be one missionary or many missionaries. So like this, it can be many here. So but GL account is one. Okay. And whenever I'm going to post the purchase entry, so front end, what we are going to do, we are going to give missionary account debit, vendor account credit. So these two are the subledgers. And system should post the automatically entry to your main GL account. So this is also an automation we have to do, where I can map for all my fixed asset GL account. For vendors, vendor also subledger, where I can map my main ledger GL account. So we seen, right, previous sessions, how system is going to pick the tax GL accounts, GST GL account. Similarly, all the subledgers back end, we need to map the main ledgers. Okay. And this is purchase activity, asset purchase. Then after that, what we can do with asset? Apart from purchase, what are the other activities we'll do with assets?
Using the production.
The asset, what we can do? Okay, we are going to purchase the assets, fine. Then what is next activity with assets? This is the activity 1 in fixed asset. Purchase of assets. And what is next activity with assets?
Doing capitalization. Capitalization. We'll start doing charging depreciation.
So we are going to use this. Okay, we are going to purchase and we are going to capitalize these assets. And we'll start. Capitalization means nothing but we are going to use this asset for your business operations. Once you start the business operation, then just know what we understand. So we have to calculate the depreciation. The depreciation we have to book. First, we have to calculate the depreciation value for the year. Then the depreciation amount we have to book for monthly. How to split monthly. Then what is the accounting entry? What is the accounting entry?
Depreciation account debit to asset.
So the next activity is we are going to run so just now I told this one of the month ending activity. We can do quarter end or year ending also, but we have the challenges. Okay, if you do quarter ending or year ending, but whatever reports we are getting monthly, quarterly, so these all are not 100% accuracy. So we are missing something, expense portion. So then it is going to give the result good profitability first 11 month, and the last month, if you book all this depreciation in 12th month, where it will happen? So it is going to show the huge loss for the organization. Okay, then so that only it is one of the month ending activity. Then what is the accounting entry? Depreciation is the expense for the organization, right?
Yeah.
Depreciation account. Okay. Example, we'll take this example. So here each asset wise we are going to calculate the depreciation. Okay, some amount I'm going to put here. Like this. Depreciation account is going to debit, and what is credit?
Accumulated depreciation.
Accumulation. Account to credit. And it is one GL account here, or again here we are looking multiple GL accounts. Altogether we will use one depreciation, one accumulation depreciation, or you want to use separate depreciation GL account for land, Separate GL account for machinery, separate GL account for laptop.
Separate GL account for
We want to use, how we are going
Separate.
to use the separate GL account for each asset group. Similarly, we need to use separate GL account for depreciation, separate GL account for accumulation depreciation. Okay, so here, what it will come? Machinery, depreciation account to debit, and now credit also machinery accumulation depreciation account. So you have 5 machineries or 10 machineries. For that machineries, whatever depreciation amount is there, it is going to post one accounting entry for these GLs. Similarly, we have electronic goods. Electronic goods depreciation account debit. Credit, electronic goods accumulation depreciation. Okay. Like I have buildings, vehicles, okay, furniture. So each asset category wise, we are going to use one depreciation GL and one accumulation depreciation. Then for that particular asset, whatever depreciation amount is applicable, suppose just I'm going to take some example, 20,000. So my machineries is depreciation is 20,000. Okay, electronic goods as the depreciation was amount 50,000. Vehicles some 1 lakh rupee. So like that we have to book the depreciation. So then what we are looking from system here, I have thousands of machineries, lakhs of asset, laptops, all those things. Okay, different laptop, different dates we purchase, different purchase value. Okay, then all these calculations we are looking from SAP system. For that, it is going to help depreciation calculation methods, and as well as whenever you are going to do these front end activities with the fixed asset. This all are we are want to so what we are looking, this value system should post to the respective GL accounts. GL is our main ledger. So front end we are going to purchase asset, front end we are going to run the depreciation for the assets. But back end what should happen? This all values should goes to the respective GL accounts. If it is one GL account, there is no much complexity. Even manually also we can do. But what we are looking?
Sir, we are not getting a voice.
Sorry, sometimes it is disconnecting, then after that it is going automatically mute. Okay, so these are the cases what we are looking. If it is one GL account, okay, it is not much difficulty. Manually we can post. I think Tally we are working, everyone aware this. So we are going to do the depreciation calculation manually, and we are going to pass the entry. Okay, but here we are looking all this accounting entry automatically. So front end, so we are going to purchase the asset, we are giving the asset code as a debit, and month ending, whatever assets we have, 1,000 assets, 1 lakh assets, we are going to run the one depreciation activity. Nothing we are going to do. Okay, system should go and identify the what are the assets we have, and also business is looking machinery related assets separate to depreciation entry, electronic goods separate entry, vehicle separate entry, building separate entry. Okay, so system should get the all GL account separately and post it entry separately. Okay, this is also is more important to job for SAP consultant backend where I can configure all these GL accounts. Okay, each asset class wise where I can go to map the all my asset GLs. Not only these activities, any other activities we are going to perform. This is second one. With fixed asset, this is the second activity we are going to do. Any other activities we will do with assets? Purchase, depreciation run. Then anything else?
Sale of the asset after using for
Okay.
specific.
And few cases, not it is regular process. Or some of the cases we can do the asset sale. Okay. So why we are going to sell? I think first class somewhere we discussed, right? Why we are going to sell the asset? Today I am going to buy one machinery or 10 machinery, 100 machineries. So assume that useful life is 10 years. Generally, till useful life end, we are going to use this machineries for our business operations. Okay. But few cases, what we are going to do? Few cases, what we are going to do? We are going to sell the assets. Why we are going to sell the asset? Assume that today we purchase the asset. 10 years is the useful life. After 6-7 years, assume that in market there are so many advanced technology machineries came. In market, so many advanced technology machineries came. So what business is thinking? So if I use this advanced technology machineries, so I can reduce my manpower. Okay, I can increase my productivity, production. Okay, and also I can increase some quality of work. Right? Nowadays we are seeing so many automations, right? Each and every industry. Even agriculture also we see so many things. Right? So similarly in organizations also so many updated technologies is coming. So if business want to replace new one, then what they are doing? They are trying to sell old assets. Okay? They are trying to sell old asset to some small companies or some other scrap sale, something they can do. Then what is accounting entry? After 6-7 years, okay, we are going to sell the asset. Means we have something net book value, right? After 6-7 years, the asset value still it is working the asset only, but I want to replace new machinery. Then I am trying to sell the old asset. Okay, when you are trying to sell the asset, you will get some revenue, right? Will get some revenue or not? We'll get some revenue. Then you want to book into accounting or not? Front end some assets we are going to sold out, fixed asset. But back end that impact we have to take to your accounting, right? Okay, some value. And sometimes when you are going to sell this asset, maybe you can sell this asset more than your net book value, right? Is it possible? Sometimes we can sell this asset more than net book value. Then what we'll get if you sell it to more than net book value?
We'll get profits.
Profit on asset sale. Okay. Sometimes we are going to sell the asset less than net book value. what will get? Loss. And no one is going to buy. Okay, I'm trying to replace the new machineries and I'm trying to solve the old machineries. If someone is going to buy something, I will get the revenue, some profit, some loss, and no one is going to buy. What will get? Loss due to scrapping. Okay. See, though both cases it is loss, but which scenario we are getting the loss is the important. Okay. So these are the different scenarios we can see in the asset model. Asset purchase, calculation, then after that depreciation run, depreciation calculation we want to do automation, and the relevant GL account we want to bring automation. And also when you go for this is the retirement case. Retirement or disposal. Asset retirement. Okay, so retirement, it can be we are going to sell to customer, but in our books we are going to retire the asset. If no one is going to buy, what we are going to do? We are going to scrap the assets. Okay. Then transfer assets. Okay. So sometimes what we are going to do, we are going to transfer the asset from one business location to another business location. Assume that I have 3-4 manufacturing plants. Maybe it can be same location or different location. So Bangalore plant to some machineries or vehicles, I am going to move to Hyderabad plant. From Hyderabad plant to Mumbai plant. Okay. So in this case, what we can do, we are going to perform the transfer activities. Okay. So when you go to subject, again, we'll discuss in detail. Just theoretically, I'm trying to give the overview of asset. Okay. So you got some idea what is fixed asset? Okay. Again, don't tell whenever I'm asking something, accounting entry, simple accounting entry. Okay. So don't think SAP course as a simple. Okay. Accounting wise also we have to understand end-to-end accounting part. So part of course I will cover end-to-end accounting, and as well as how we'll get this accounting, this depreciation calculations or payment of due date calculations. Okay. How we can do the payment automation, how we can do the depreciation calculation automation, and how we can post these values to respect to GL account. And as well as AP process, we understand tax, so how it is calculating, how it is posting to GL. Okay. So everywhere we need to understand the front end process of business clearly, what is the accounting entry, then how to bring this into SAP system. Okay, this is our core job. Okay, we'll continue tomorrow. So tomorrow we'll cover this process. MM and FI integration, how we can start the procurement process. Just now I shown today morning session one screen, right? So if possible, I will try to run the one end-to-end cycle through system. Okay, whatever materials we are going to buy, we have purchased. So procurement team, how they are going to raise the purchase order to vendor, then against that, how to receive the stocks, then for that, how to invoice it, again, how to make a payment. So we'll run this end-to-end cycle MM. If you understand this end-to-end cycle, MM to FI integration, so opposite way we can understand SD process, sales process. Okay. So we'll try to complete these 2 cycles tomorrow. Okay. Fine, we'll continue same timings.
Okay, sir. Thank you.